Hi friends, welcome to SNCA Study Club, a platform for CA final students. Before moving towards 13B question, we have to discuss what essay 250, that is consideration of what laws and regulations in an audit of financial statement. This is an IPCC level essay, so I am not going that much, that is in depth, okay, but I will explain the important terms or importance matters with respect of this essay 250 from the exam point of view. Essay 250 means what? Consideration of laws and regulations in an audit of financial statements. So here first of all we have to determine what are the responsibility of the management and auditor. Management and TCWG, that is those are the governance. They are responsible to comply with the laws and regulations and to prepare the financial statement in according to the applicable laws and regulations, which is having what? A direct impact on the financial statement. Auditor should obtain what? An understanding of the laws and regulations, that is legal framework that is applicable to the entity, which is having what? Direct impact and indirect impact. Okay, so here I have provided detailed explanation of management responsibility. First of all, monitor. We know that management of the organization is responsible to maintain what? A legal framework or the applicable laws and regulations. They have to prepare the financial statement and they have to conduct the business in according to the applicable laws and regulations. So first of all, they should monitor the changes in legal requirement. That is, they may some specific rules or regulations or specific laws may be applicable to the concerned entity. So the concerned entity should always monitor whether there exist any changes in legal requirement. Suppose if it is a company, company's act is changing, so they have to prepare the financial statement or they have to conduct the business in according to the changing in legal framework or legal regulatory requirements. So it is the responsibility of the management of the organization or TCWG of the organization to monitor the changes in the legal requirement. Then determine system required to design or redesign. That is, the legal law and regulation is changing, which is applicable, which is having direct impact on the organization. In that case, concerned organization should determine whether they are required to design a new system or they are required to make certain modification to the existing system. Suppose this is the existing system, that is whether modification is sufficient or whether they have to create or they have to design a new system. So this is also responsibility of whom? The management. Then we also know that the management of the concerned organization is responsible to design what? An internal control system. Such an internal control system should be designed in according to the applicable laws and regulations. So they are responsible to design internal control system and its operation in according to the applicable laws and regulations. Then training the employee, that is providing what? Appropriate training to the employee so as to comply with what? Changes in law and regulation. Right friends? So monitor the compliance. They are providing training, they are providing direction, they have to ensure compliance with the laws and regulations. So it is the responsibility of the management whether their employee is ensuring the compliance. So whether the employees are working in according to the changing environment, law and changes in laws and regulations. So the concerned management should monitor the compliance, that is whether the employee is working in according to their direction or in according to the changing environment. Then maintain what? A register. Suppose it is, we already know that it is the responsibility of the concerned organization to make the payment of what? It was what? Excise duty, custom service tax, etc. But now GST has been comes into existence, so they have to make or they have to certain changes in according to the changing environment. This is also what? An example. So they should maintain a register that is providing detailed explanation with respect of the laws and regulations, that is having direct impact and indirect impact, that is which is required to be followed by the concerned entity or the violation of which lead to penalty and fine or which is materially affecting the existence of the organization or which is having what? Material impact on what? Going concern. That is the ability to continue as a going concern. Then engage a legal counselor. Suppose the concerned organization, that is if they have number of laws and regulations that is applicable to the concerned entity, they should employ or engage what? A legal counselor. Suppose if it is what? Large size organization, in that case they may that is internal audit can be applicable, they may appoint what internal auditor, and they may also access what audit committee. So these are all the responsibility of the management so as to ensure or to conduct the business in according to the applicable laws and regulations. First of all, they have to monitor the changes in legal requirement, or whether they have to design a new system or redesign the existing system. They are also required to monitor the compliance. They should provide what training to the employee. They should once more, they should develop and enforce what a code of conduct. Code of conduct means you should do in this way, you should do all these acts, you should not do, or you should not engage in these types of matters, etc. So they should exist what a code of conduct, or if that is establishment of such a code of conduct is the responsibility of the management and TCWG, and it is not the responsibility of the auditor. They should provide training to the employees so as to ensure the compliance. They should maintain register. They can engage what legal counselor, etc. So these are the responsibility of the management and TCWG as per SA 250. We have completed what this portion. We are moving towards the next section. Okay. So here auditor should obtain what an understanding of the entity and its environment. We know that as per say 315 we have already discussed that. That is, auditor should obtain what understanding of the entity and its environment. It is indirectly means that auditor should obtain what an understanding of the applicable laws and regulations on the entity. That is, auditor should obtain what a general understanding of the legal regulatory framework plus how entity complying with this. That is, how entity is complying with the laws and regulation or legal and regulatory framework. Then auditor should obtain what an understanding with respect of the laws and regulation that is having what direct impact on the financial statement. Then check its compliance, that is whether the entity has complied with the same, that is whether these laws and regulation has been complied by the entity. Auditor should perform what audit procedure so as to determine the compliance or non-compliance with that laws and regulation. For that they have only two types of audit procedure. That is, auditor is required to perform audit procedure for the purpose of obtaining audit evidence with respect of what compliance with laws and regulation. For the purpose of this, they have mainly two types of audit procedure. First of all, inquiry. Inquiry can be with the concerned management, that is whether you are complying with the laws and regulations or not. Plus correspondence with the authority. Correspondence can be what some documents or some receipts or some forms or returns which has been filed with the corresponding authority, or it can be what that is the correspondence with the authority. So they have mainly two types of audit procedure, inquiry and checking what the correspondence with the authority. Then auditor have to be alert while performing audit procedure and obtaining what audit evidence. That is, auditor, after understanding the entity and its environment and applicable laws and regulation, auditor have to determine whether they are complying with this or not. Plus auditor remain alert, that is for the purpose of determining whether the entity has made required changes or designed or redesigned the existing system as per the changing needs of the laws and regulation. Plus obtain what written representation. Written representation means what a written document which has been provided by the management to the concerned auditor. This is mainly for the purpose of confirming their responsibility. We have already discussed written representation as per say 580. It is the responsibility of the management to provide such a written representation with respect of that. That is, here concerned management have to state in this written representation that they have complied with the laws and regulation in preparation of financial statement, and they are maintain an internal control system in according to the applicable laws and regulation, etc. Then suppose auditor has identified a non-compliance with certain laws and regulation, but it is not having any material effect on the financial statement. In that case, auditor is not required to perform any audit procedure. That is, auditor is not required to perform audit procedure with respect of non-compliance of laws and regulation that is not having a material impact. So first of all, auditor have to obtain what an understanding of the entity. Then applicable laws and regulation, legal regulatory framework, how the entity is ensuring compliance with the laws and regulation or legal regulatory framework. Then auditor have to obtain what audit evidence with respect of compliance over the laws and regulation that is having direct impact, which can be obtained by inquiry and correspondence with the concerned authority. Then obtaining written representation, and auditor is not required to perform any audit procedure with respect of laws and regulation that is not having what material impact on the financial statement. Okay, moving towards the next part. So here we are discussing what how to obtain understanding of the legal framework, that is how auditor can obtain an understanding of the legal framework that is applicable to the entity. So first of all, auditor should use his existing understanding, right? What is mean by this existing understanding? What is mean by this existing understanding? It is mainly stating that we will obtain what? An understanding of the entity and its environment as per say 315, that is legal, regulatory, then what? Some other external factors, etc. So auditor may use these understanding mainly for the purpose of obtaining what? An understanding of the legal framework. Then auditor should what? Update the knowledge or update what? Understanding. Why this updating is required? Because there may have certain changes in laws and regulations that is directly applicable to the or that is directly determine the reported amounts and disclosure, that is update the understanding with respect of laws and regulation that will or that may directly determine what? Amount, right? Or reported amounts, reported amounts and what? Disclosure, right? So auditor should update the understanding with respect to the laws and regulation that will directly determine reported amounts and disclosure, right friends? Then auditor, next opportunity is what? Or next option, sorry, not opportunity, next procedure is what? Inquiry with the management with respect of laws and regulation that is having direct impact or directly determine the reported amounts and disclosure in the financial statement. Or auditor may also obtain understanding with respect of the laws and regulation that may expected to have fundamental effect on the operation of the entity, that is laws and regulation expected to have direct impact on functioning of entity. Then auditor is also required to obtain with respect of the entity's policies and procedure to ensure compliance. Entities policy and what? Procedure to ensure compliance. Plus it is also responsibility of the auditor to conduct an inquiry with the management regarding the policies and procedure with respect of what? Policies and procedure that is required to be adopted by the management for the purpose of identifying, then what? Evaluating and accounting what? Litigation and claims. That is, we understand that management of the organization is responsible to ensure that the financial statements are prepared or all the items of the financial statements are reported or disclosed in according to the applicable laws and regulation. But auditor is also required to obtain an understanding of the legal framework. For the purpose of that, he may use his existing understanding, that is by understanding the entity and its environment, that is apply SA 315. Plus auditor is also required to update the understanding with respect of the laws and regulation that will determine or that may materially affect the amounts and disclosure in the financial statement. Plus auditor should inquire the management with respect of that rules and regulation that is having what? Direct impact on the financial statement, or what? reported amounts and disclosure. Then laws and regulation that is expected to have direct impact on the functioning. That is, if the organization is not complying with that laws and regulation, that may materially affect the entity's ability to continue as a going concern. That is indicate as a 570. Okay, so auditor is also required to obtain an understanding with respect of the laws and regulation that is fundamental to the continuous operation or functioning of the entity. For that, auditor is also required to conduct what inquiry with the management plus entities procedure and policies with respect of, or that is required to ensure the compliance of the applicable laws and regulation. Then auditor is also required to obtain an understanding with respect of the policies and procedure which has been adopted by the management for identifying, evaluating and accounting the litigation and claims against the concerned entity. Right, friends? So now we just discussed with respect of the responsibility of the management, responsibility of the auditor, and how auditor obtain understanding with respect of the entity. Next point. So here we are discussing the laws or regulation or rules that is having what direct impact on the financial statement. First of all, industry specific rules and regulation. That is, suppose if it is a bank, then Banking Regulation Act is applicable. Right, friends? If it is an insurance company, then what? IRDA Act is applicable. Plus RBI circulars will be applicable. Suppose if it is a company, in case of company, the same is applicable. That is, Companies Act is applicable. Then if it is related to market or the Consumer Product Competition Act is applicable. So not that is not only Consumer Products Competition Act is applicable if it is a business, etc. So industry specific rules means if it is a Banking Regulation Act, RBI circulars, or if it is an insurance company, IRDA, Company for Companies Act. So industry specific rules and regulation that is required to be understood by the auditor, because which is having what direct impact on the financial statement. Or the rules and regulation or laws and regulation that is related to recognition of expense under Income Tax Act. That is computation of tax. That is, we know that if the depreciation is excess as per Income Tax Act, that is we have to determine or we have to follow about Income Tax Act 1961 plus related rules and guidelines, or what certain circulars, etc. So in case, that is, if company or the concerned entity is required to make the payment of tax, it is absolutely right now. That is, if it is a company at the rate of 30%, etc. So for the purpose of determination of that income, or for the purpose of determination of that income, we have to allow certain expenses. So such expenses have to be in according to the Income Tax Act. So this is having what direct impact, that is what related to recognition of expense under income tax. Then accounting of certain transaction under government contract. Suppose we are entering into certain contracts with the government, then absolutely we have to follow certain rules and regulation that may have a direct impact on the such transaction. So if we are accounting such transaction, we should what follow or understand the laws and regulation. That is in all the policies or what all the procedure which has been adopted by the government with, or the directions issued by the government shall be applicable, or guidance which has been issued by the government shall be applicable with respect of transaction if it is entered into with the government. Right, friends? So this is just an example I had given only for the purpose of enhancing your understanding. Okay, moving towards the next portion. Normally, auditor may face certain difficulties to detect the non-compliance. Why it is happening? Can you guess why auditor is facing difficulty to detect that non-compliance? This is my question. First of all, you should understand that laws and regulation, that is, there may exist certain laws and regulation that is related to the operational aspects of the entity, which is not affecting the financial statement and which is not captured by the entity's information system. Example, suppose it is a medicine manufacturing entity. This is the medicine. Suppose this is a capsule. I don't know which are the ingredients on this capsule. So all these ingredients has to be included, or it has to be prepared in a particular or in the prescribed proportion. Right? Suppose the concerned manufacturing entity has not prepared these capsule in the prescribed proportion, which may, or that is, if they does not prepare in that prescribed proportion, which may affect what the entity's ability to continue as a going concern. right? But it cannot be detected by the auditor because these prescribed proportion is not affecting the financial statement, and it cannot be identified by the entity's information system. So this is mainly affecting, or these proportion or the laws and regulation not affecting what the financial statement, but it is affecting what the operational aspect. That is, strict actions may be taken against the concerned manufacturing entity because they are not preparing this capsule, or they are not manufacturing this capsule in the prescribed proportion, which may affect what, or which may hazardous to the health of what the patients, right? So it is affecting the going concern, but it cannot be detected by the concerned auditor because it is affecting what the operational aspects or operational efficiency and not affecting the financial statement, right friends? Then the same is happening in the, that is we know that in case if we are doing what, a fraud, we may also design certain methods to conceal the fraud. So the same is happening here also. That is, if the concerned entity is making any non-compliance, they may decide, that is, if they are making intentional non-compliance, they may decide methods for the purpose of concealing that non-compliance, which in that case auditor may not be in a position to detect the non-compliance. So they have two reasons because of which auditor is facing difficulty to detect the non-compliance. First case, it may be the laws and regulation that is affecting the operational efficiency and not affecting the financial statement, or what, intentional non-compliance is concealed by the entity by designing their own methods and strategies. I hope you understand, right friends? Moving towards the next part. So here we are discussing what indicators of non-compliance, that is, if these indicators can be detected or identified by the auditor, which is indicating what, non-compliance, or which is just what, displaying the non-compliance, or which is expressing or expressing the non-compliance. I have used mnemonic here. You see tape, okay? It is not required. If you are comfort with this mnemonic, you can use other ways. It is not required, okay? You see tape. So you stands for unusual transaction. If the concerned entity is entering into certain unusual transaction, or if the concerned entity is making certain unusual payments in cash, or if they are making certain unusual purchases or unusual payment, that is unusual purchase of the goods or unusual payment for certain unspecified services, that is, then what, payment for certain goods and services made other than to the country from which the goods or services is originated. That is, we know that where our country is entering into a transaction, it can be export or import with other country, we have to follow FEMA rules, etc. FEMA rules, etc. Or they have certain exchange rate that is applicable to the concerned organization. But if the entity is making, that is purchasing from other country, but the payment is made to some other country, so it is an indicator of what, non-compliance. Then again, T stands for unusual transaction. T, unusual transaction with tax havens, that is where the tax is not applicable, right? So they are indicating, or they are entering into certain unusual transaction. Or A, excessive agent fee. No, we know that they have certain limits for brokerage commissions, etc., or agent fee, etc. If the concerned entity is making excessive agent fee, they are not complying with SEBI guidelines, right friends? So excessive agent fee, commission and brokerage. Then purchasing at a price above or below the market price. Then payment without proper exchange control. These are indicator of what, non-compliance. I hope you understand. So first of all, unusual payment in cash or unusual transaction, unusual payment for the goods and services. Then payment for goods and services which has been made to a country from where it is not actually purchased. Then unusual transaction with the tax havens. Then excessive agent fee, excessive commission, excessive brokerage. Then purchasing at a price above or below the market price. Then transaction without having proper exchange control. Okay friends, moving towards the next portion. So the next question is, what should be the audit procedure that is to be performed by the auditor if he detected or understand a non-compliance. That is, this is the auditor who is aware of a non-compliance. he obtained what? A non-compliance, that is occurred in the concerned organization. So he should perform audit procedure to understand the nature of non-compliance, that is which type of non-compliance, whether it is affecting the financial statement materially or not, or the circumstances in which it has occurred, that is which types of non-compliance has occurred, or which is the circumstance in which the non-compliance is occurred. Then auditor is also required to perform the audit procedure to evaluate the possible effect on the financial statement, that is auditor should determine whether such a non-compliance is materially affecting the financial statement or whether it may possibly affect the financial statement. Suppose if it lead to fines and penalty, or if it is materially affecting what the entity's ability to continue as a going concern, it will possibly, or it will affect the financial statement. So auditor is also required to evaluate the effect of non-compliance on the financial statement. Plus then the next step that is to be performed by the auditor is to discuss with the management where it is appropriate to TCWG, that is auditor should communicate the same, that is with respect of that non-compliance, that is a non-compliance has been occurred in the concerned organization, and the same has to be communicated to the management and TCWG. Then if management and TCWG, that is after making such a discussion, they are not providing sufficient information about the non-compliance, that is auditor is not in a position to obtain sufficient and appropriate audit evidence with respect of the non-compliance, even after making such a discussion with the management and TCWG, auditor may obtain legal advice. Right, that is what should be the impact of this non-compliance. The same shall be communicated to some external legal authority, etc. That is they may obtain what? Legal advice. Still auditor is not satisfied with the audit evidence, or still if he not obtain audit evidence which is sufficient and appropriate, auditor may modify the audit report. That is even after such a discussion with the external legal authority, or even after obtaining such a legal advice, he is not getting sufficient and appropriate audit evidence with respect of the non-compliance, he may issue modification to the audit report as per 7 Note 5. Okay. Moving towards 13th B question, which is stating that while verifying the employee record in a company, it was found that a major portion of the labor employed was child labor. On questioning the management, the auditor was told that it was outside the scope of the financial audit to look into the compliance with other law. That is, here auditor is stating that it is out of the scope of the financial audit. So you have to express your opinion. That is what should be done by the auditor, or if the auditor has done so, what should be the effect? You have to answer in that point of view. So here it is mainly about the laws and regulation, which is the applicable standards. Now we have covered, first of all, indicate what? Relevant essay. Here it is essay 250, consideration of laws and regulations. Right friends, so it is mainly stating that the auditor is responsible to obtain an understanding of the legal regulatory framework in which the concerned entity is operating, and obtain an understanding whether the entity, or what are the procedure which has been employed by the entity to ensure the compliance. Right friends, so first of all, auditor is required to obtain what? Understanding of the legal regulatory framework plus methods adopted or procedure which has been undertaken by the entity so as to ensure the compliance. Right friends, so auditor should obtain an understanding with respect of the laws and regulation having direct impact on the amounts and what? Disclosure in the financial statement. Plus auditor is also responsible to understand non-compliance which attracts what? Penalty and fine, which is required to be included in the financial statement, but such a non-compliance not materially affect the financial statement. Right friends, affect financial statement. So in the given case, the major portion of the labor employment was the child labor. Okay, if the auditor, thus auditor should ensure the disclosure of the above fact and provision for the cost of fines, litigation or other consequence for the entity. That is, auditor have to ensure that whether it auditor plus have to ensure what? Disclosure of the same. That is, employee, that is employee record is showing what employment of child labor, and also provide or determine whether provision has been made, for the cost in terms of fine, litigation, penalty. That is, we know that it is not ethical to employ the child labor. So auditor should ensure what the disclosure of the above fact, that is employment of child labor, and also provision, that is disclose provision for the cost of the fine, litigation, other consequence for the entity. In the case if the auditor conclude that non-compliance has a material effect, then auditor may conclude it is material or not material. Suppose if auditor is of the opinion that it is material to the organization, in that case auditor may issue or express what? Qualified opinion, adverse opinion on the financial statement. So in this question, employee record shown that employment of what? Child labor, that is such an organization also employed child labor, but auditor is of the opinion that is out of the scope of the financial audit. So actually what should be done by the auditor? So you should first of all indicate the relevant essay, that is essay 250, compliance of laws and regulation. Auditor should obtain an understanding of the legal regulatory framework that is applicable to the organization and determine the methods or procedure that has been adopted by the entity so as to ensure the compliance, or how the entity or concerned entity has complied with the applicable laws and regulation. Then auditor is also determine what? The amount. Auditor should determine the laws and regulation that is having direct impact on the amount disclosure in the financial statement, and determine, and also that is they may also have certain laws and regulation that is not having but the material effect, but auditor should determine the penalty, fine that may be attracted to the financial statement if non-compliance has occurred, but which may not materially affect the financial statement. Then you should indicate what is happening in the question and determine. Auditor should disclose the same, that is the employment of child labor, plus also disclose the provision that is required in terms of cost that may be incurred as what? Fine, litigation and penalty. Auditor may conclude that it is material to the organization and not material to the organization. If auditor is of the opinion that it is material to the organization, auditor may issue what? Qualification to the audit report, or may issue what? Adverse opinion. Okay, moving towards next question.